There's a question millions of Canadians are quietly asking themselves right now. Should I buy or should I wait? And the honest answer isn't what most real estate agents, banks, or even family members will tell you. Because Canada's housing market in 2026 doesn't play by the old rules anymore. The mortgage your parents got? Gone. The bidding war your neighbor won in 2021? A different era. The dream of owning a home by 35? For millions of people, delayed by a decade. And yet people are still buying. Every single day. Some are making one of the smartest financial moves of their lives. Others are walking into a situation that will quietly drain their finances for years. The difference? What they knew before they signed. So if you're thinking about buying a home in Canada, whether that's this year, next year, or someday, stay right here. Because what comes next could save you or cost you hundreds of thousands of dollars. 1. Understand how much the market has changed. 10 years ago, many middle-income Canadians could still buy homes in major cities. But from around 2015, prices in Toronto and Vancouver started climbing fast. Then came the pandemic. During 2020 and 2021, interest rates dropped to historic lows. Some mortgage rates fell below 2%. Cheap borrowing triggered one of the biggest housing booms in Canadian history. People rushed to buy. Investors entered aggressively. Bidding wars became common. In some cities, homes sold hundreds of thousands of dollars above asking price. But beginning in 2022, the Bank of Canada rapidly increased interest rates to fight inflation. And suddenly, many homeowners who bought during the low-rate era faced dramatically higher monthly costs. Some Canadians renewing mortgages today are seeing payments jump by 20 to 40%. This is why understanding market timing and long-term affordability matters more now than ever. 2. Don't just look at the house. Study the area. One of the biggest mistakes buyers make is focusing only on the property itself. In reality, the neighborhood can matter even more than the house. Before buying, research crime rates, future developments, flood risks, school quality, public transit, and job opportunities. Some Canadian cities are growing rapidly because of immigration and economic expansion. Others are losing population and struggling economically. A house can be renovated, but a declining location is much harder to fix. That's why experienced investors say, buy the location first. 3. Understand the real cost of a mortgage. Many first-time buyers focus only on the listing price. But the mortgage and everything around it is what truly determines affordability. In Canada, even a small increase in interest rates dramatically changes monthly payments. And over the last few years, millions of Canadians learned this the hard way. Property taxes, insurance, utilities, maintenance, closing costs, future rate risk. None of these show up on the listing page, but all of them hit your bank account every month. Experts increasingly recommend stress testing your own finances before buying. Can you still afford the house if interest rates rise again? Can you survive a temporary job loss? Can you still save money after paying all housing costs? Because being house rich but cash poor has become a serious reality in parts of Canada. 4. Many first-time buyers are now older. In previous generations, many Canadians bought their first home in their late 20s or early 30s. Today, that age has increased significantly. In Ontario, the median age of first-time buyers has climbed close to 40 in some reports. Why? Because saving for a down payment has become much harder. High rents, student debt, inflation, and rising prices have delayed ownership for millions. As a result, many buyers now rely on family financial support, combined household incomes, or smaller condos as entry points into the market. Others are leaving major cities entirely in search of affordability. 5. Condos are not always cheaper long-term. Many buyers assume condos are automatically the affordable option. And while condos usually have lower purchase prices, they often come with additional monthly fees. These fees can increase over time. In older buildings, they can become extremely expensive. Before buying any condo, investigate the financial health of the condo corporation, special assessments, building maintenance history, and reserve funds. Some buyers have faced massive surprise repair bills because they didn't check these things. A cheaper purchase price does not always mean lower long-term costs. 6. Immigration and population growth are changing the market. Canada's population has grown rapidly over the last several years. Immigration remains one of the biggest drivers of housing demand. In major cities, strong population growth continues putting pressure on rent prices, home inventory, and infrastructure. This is one reason housing affordability remains a major political and economic issue across Canada today. Some experts believe demand will continue supporting prices long-term. Others warn that affordability problems could trigger corrections in overheated markets. Either way, understanding local population trends is now essential before buying. 7. Think long-term, not just today. One of the most important questions buyers should ask is simple. Can I realistically stay in this property for at least 5 to 10 years? Short-term buying has become much riskier in modern markets. Transaction costs, interest, taxes, moving expenses, and market fluctuations can quickly erase profits. Canadian real estate has experienced both booms and serious downturns. During the early 1990s housing crash, some markets took years to recover. Many financial experts now recommend buying based on stability and long-term affordability, not fear of missing out. Buying a home in Canada today is no longer just about finding a beautiful property. It's about understanding economics, interest rates, population growth, market cycles, and your own long-term financial stability. Some people, buying still makes sense. For others, renting longer may actually be the smarter financial decision. But in today's market, the most dangerous thing a buyer can do is purchase a home without fully understanding the reality behind Canada's housing system. Because one decision today could shape your financial future for decades.